This is the Stock and ETF report, seasonal Stock and ETF report for today, August 16, 2022. Let's go to Trade Seasonal and look at our top entries for Dow 30. Microsoft's still on the top. Look at that. This stock is just great. It has this period of sideways move for the last 10 years. Otherwise, this stock is pretty much straight up. 255-day opportunity makes an average profit of 19.43% last 10 years. What if we go to maximum data, 35 years? Look at this. Microsoft's gone up dramatically here from October 12th until November 2nd. It's a huge rise and then goes sideways in the last 35 years. Take a look at this. There's been only, let's look at more details here. Average profit was 26.68% last 35 years, 83% profitable. Sharp ratio of 0.69 shows inconsistently in returns. Let's take a look at that. Yeah, the returns are not consistent. Last year it lost a little bit of money, but it was a much bigger gains from 89 to 98. Now it's smaller gains, but still it's been very profitable since 2009, except for last year. United Healthcare, it's pegged at 280. We only look 280 days in the future as of current. United Healthcare is pegged at 280. Let's take a look at the seasonal chart. The stock is just fantastic, going straight up pretty much last 10 years. Let's look at our maximum data is 37 years. No, the stock just goes straight up. The only time it didn't is right over here from, let's switch to January to December view. So it has some sideways movement here, but look at this. It goes 37 years. It's gone straight up during this period of time. Let's go to Walmart. Another great stock. I like this view better. Made average profit of 7.33% in 250 days for last 10 years. Let's look at Home Depot. Yeah, most of these are long-term except for Procter & Gamble opportunity is 122 days today until December 16th. Made an average profit of 6.4% last 10 years. Let's look at another shorter term opportunity. JP Morgan. JP Morgan averaged 10.21% from today until November 19th. Last 10 years, it's been pretty consistent with a Sharp ratio of 1.01. How about longer term? We have 41 years of data here. Oh, there's been many bad years during this period. So if you look at it here, in the long-term view, the markets, JP Morgan has been sideways right over here. So maybe this is not the best time to get into JP Morgan. The extreme bullishness starts October 25th. Look at our blogs. They're going to come out in the next few weeks and going to show these magical times when market seems to be bullish. Okay, let's go just look at the top on NASDAQ. Oh, net NetEase is at the top of the list. And new entry, NetEase, average profit of 22.91% today until January 30th. It's a good opportunity. Maybe you can buy it a little later than this, but no, this stock's been going up. There's a little bit of a down move over here in average. We don't know exactly if it's important. If you are a premium member, you could do this. And actually see what happens during this time. Your algorithm says that this is best as short with average profit of 5.58%, but a very low Sharpe ratio. So this may be a problem. So it might be a better time to buy this would be September 10th. However, it's just fine to buy it here too, because the Sharpe ratio is much higher. We care about Sharpe ratio. Higher Sharpe ratio gives you the knowledge of consistency. When the Sharpe ratio is 2.18 like this, above 1, that means the standard deviation, which is the variation of returns from one year to the next, is very low. So you could count, you were able to get very high returns in the last 9 years. 2012 it was a loss, so let's cut 2012, see what happens. To cut it, we just have to say we want to look on seasonal view or only 9 years. So now we just look at 9 years. Look at what happens to Sharpe ratio. It jumps to 4.82%. This is a good opportunity. It has been so consistent last 9 years. Average profit 22.91%. I think I am going to trade this myself. It's a $92 stock, so maybe it's also a good opportunity for option trade, but I think I'm just going to add it to my long-term investments. Costco, another great one. Sharpe ratio 1.63%. The reason Sharpe ratio is lower, as you can see, there was quite a bit of difference between returns in this 27% in 2014 versus 4.57% in 2015. It's still great, but it's not as consistent. Higher Sharpe ratio means more consistent return from year to year. Okay, let's just look at the top of S&P, the Continental Exchange, and this Nextra Energy is a great one that keeps coming up on the top of the list. Nextra Energy does renewable energy. I think they are in wind or solar or both, but they seem to be very consistently profitable. This is a good long-term investment. Marsh & McLennan. I don't know what they do, but they sure have a very good return. And this is a bad area right here. Let's take a look at right here. How bad is this area? Look at that. From beginning of December until end of January, the stock tends to go down. At least last 10 years it has, with an average profit of 4% in the short side. However, Sharpe ratio is low because of the huge jump in 2019. Accenture, the consulting company, also another consistent winner. Let's look at Accenture with all the data. We have 20 years of data. We see that over here in the area beginning of the year, which is beginning of the year is right around here. It goes sideways for a while pretty much, but the big move up is right here. At least that's what this is showing. So you can basically find trades by just going and shifting this, or just look at what our algorithm finds. Our algorithm looks for high Sharpe ratios. High Sharpe ratios is what we want. Russell, well, fairly similar to S&P 500, and Wilshire, slightly different. Wilshire 5000 is all tradable stocks in United States. Look at that consistency. 3.55, 83 days, today until November 7th. This stock is on fire. It's a good time for this one. It goes down here, but it probably is going to drop that Sharpe ratio if I try this. Quite a bit. It's better to have it here. Sharpe ratio is high. This is the time to buy AON Inc. I don't know what they do, but they sure consistently return profits. And First Financial bank shares, 7.3% in 7.34% in how many days? 84 days, today until November 8th. Just quickly look at ETFs, the top of the list. Oh, they have some short-term ones, but these short-term ones don't always return a lot. Oh, there's a big one here. Long-term Treasury Portfolio ETF, 1.34% in 7 days. It's been doing it with a Sharpe ratio of 1.61. Didn't work in 2019, but look at how consistent it is for the rest of the time. We have 14 years of data. It is consistent. This is a good one if you want to do very short-term ETF play, potentially with options. Government bond Vanguard. Yeah, these are pretty much the same. Very close. And then our first long-term semiconductor returns 15.6% in 225 days. Pretty cool. Okay, that's it for today, July 16th. Sign up for a free account and you'll be able to see all the opportunities for the current date.